Welcome to the weekly CFD overview of the global financial markets. The euro rose over the past week after investors were relieved that European Parliament results turned out slightly better than expected. Pro-European political parties won around 2/3 of votes, gaining slightly less seats than during the last elections. This was supportive for the euro. The British pound continued to weaken against the dollar. Prime Minister Theresa May decided to resign in early June as she didn't succeed in delivering Brexit. The rise of the Brexit Party at the European elections reminded investors that the default scenario of a no-deal Brexit is no longer an unrealistic prospect. For its part, a volatile dollar climbed to a 2-year high on increasing trade tensions and rising treasury yields, before falling lower by the end of the week. The Japanese yen strengthened as the ongoing trade dispute between the US and China pushed investors towards safe haven instruments. Gold prices slightly rose over the week as trade tensions and market volatility continue to support the appeal of the precious metal. US stock indices fell last week, pressured by trade-related worries, but the decision of President Trump to possibly soften the impact of sanctions against Huawei provided some support to stock markets. However, US stocks could be on target for their worst month so far this year. Oil prices were in freefall last week as the fear over the impact of ongoing trade and tech-related tensions between the US and China weighed heavily on oil prices. In addition, the OECD revised global economic growth for 2019 from 3.3% to 3.2%. However, on Monday, oil prices were supported by the perspective of further OPEC supply cuts and its intention to extend them beyond June, which will be discussed at the next OPEC meeting in a month's time. You've been watching the CFD Weekly overview of the global financial markets.